Hi guys, welcome to the YouTube channel YouTube Finance. What if I told you that you're being manipulated and duped? The whole cryptocurrency market seems to be crashing, and if you still don't know why, then stick to this video. In today's video, I'm going to clue you in to the real reason why Bitcoin, Ethereum, and other altcoins crashed and continue to crash. We'll be talking about Bitcoin's recent crash, its recent conditions, and we'll also shed some light on whether it's good to buy now or not. In the end, we'll talk about some future predictions for Bitcoin, whether its price will rise again or not, and most importantly, we'll take a look at the circumstances that determine whether Bitcoin will ever reach 100,000 or not. So make sure to watch the video to the end if you're somehow connected to Bitcoin. Also, before moving forward, please keep in mind that this video is not any investment advice. The data provided in this video is for informational and educational purposes only. Without further ado, let's get back to the topic. First of all, for those who are still sleeping somewhere and want to know more about Bitcoin, let's have a quick discussion on Bitcoin. Well, Bitcoin is the first and most well-known cryptocurrency. It enables peer-to-peer value exchange in the digital realm via a decentralized protocol, cryptography, and a mechanism to achieve global consensus on the state of a periodically updated public transaction ledger known as a blockchain. In practice, Bitcoin is a type of digital money that exists independently of any government, state, or financial institution, can be transferred globally without the need for a centralized intermediary, and has a known monetary policy that is arguably unchangeable. Moving forward, let us now discuss why Bitcoin is collapsing. Bitcoin recently fell precipitously, briefly falling below 30,000 for the first time since July 2021. The largest cryptocurrency in the world is now worth less than half of what it was in the fall. Other cryptocurrencies such as Ether and BNB have experienced similar drops, and trading volumes on major exchanges have also decreased. Some experts are now predicting a crypto winter, in which the sector will shrink for a long time after its incredible growth. The current decline in Bitcoin and other cryptocurrencies is the result of a combination of short-term and long-term factors, including larger financial markets and the failure of a major stablecoin. Here are some of the main causes of the current Bitcoin crash. Bitcoin is interconnected with the rest of the financial system. Crypto enthusiasts have long hoped that the cryptocurrency's independence would make it resistant to inflation and crises. Bitcoin, the most popular cryptocurrency, is controlled by no central issuer or authority. Many argue that Bitcoin's independence from the government should ensure that it retains its value in the face of economic downturns, international wars, or drastic policy changes. However, the last few years have demonstrated that this is not the case. When the coronavirus pandemic devastated global markets in March 2020, Bitcoin plummeted by 57%. Analysts think that free time, disposable income, and money pumped into the world by governments to help with pandemic relief caused stock markets and cryptocurrencies to recover and rise at an incredible rate. However, investors have recently been wary of change, as inflation prompted the Federal Reserve and other central banks to raise interest rates. Bitcoin, which swings wildly by nature, may appear too risky for investors looking for a safe harbor. Bitcoin's decline follows the Dow and Nasdaq's worst single-day losses since 2020, as well as the S&P 500 reaching a new low in the last year. Russia's invasion of Ukraine has unsettled the market, exacerbating inflation, supply chain issues, and oil prices. Slowed growth in China as a result of COVID-19 outbreaks is also contributing to financial concerns. Some crypto fans think that Bitcoin's price will break away from the stock market in the future, but for now, The two are linked in a way that can't be broken. Cryptocurrency is inherently volatile. Even the most ardent crypto supporters will tell you that success in the crypto world is far from certain. Its volatility is part of what draws many speculators in. The possibility of making money much faster than traditional stockbrokers. However, the promise of the boom is accompanied by the promise of the bust. Since the inception of Bitcoin in 2009, there have been several major bear and bull cycles, with short-term investors flooding the market and then abandoning it. Many exchanges, particularly during boom times, offer inherently risky propositions that allow traders to invest with borrowed cryptocurrencies. If prices fall again, whether as a result of large investors selling their shares or for other reasons, a lack of actual cash flow can contribute to even faster free falls. The number of people investing in cryptocurrency at any given time is also highly variable. According to crypto firm Grayscale Investments, more than half of traders who held crypto at the end of 2021 had only entered the market that year. And it's no coincidence that crypto crashes tend to happen on weekends. That's when investors tend to tune out, allowing those who are trading to make bigger waves. Concerns about regulatory and security violations. Given that some of the value of cryptocurrency is derived from people's belief in it, market jitters can be caused by surrounding skepticism or policy changes. For example, China's crackdown on Bitcoin mining in mid-2021 caused Bitcoin to fall from 65,000 in April to 35,000 in June. The total market capitalization of cryptocurrencies fell around the same time. Elon Musk said that Tesla would stop taking Bitcoin payments in May 2021 because of concerns about the environment. Many crypto investors have been watching with bated breath as governments in key crypto trading or mining countries, such as the United States, China, India, and Germany, have moved toward regulation. Meanwhile, a wave of hacks and security breaches has rocketed the crypto world, including a $600 million hack of the Ethereum sidechain Ronin. These hacks have shook consumer trust in cryptocurrency and slowed growth from new potential buyers entering the market. According to Edward Moya, a senior market analyst at Onanda, the number of real-world use cases that would bring newcomers into the crypto space appears to be slowing this year. There's a widespread belief that mainstream adoption of Bitcoin will take much longer than expected, Moya said. Right now, the crypto market appears to be in a wait-and-see mode. The big picture. It remains to be seen whether the crypto slide continues. Some believe that as more investors panic, the situation will worsen. However, when the price of Bitcoin fell below 30,000, evangelists bought the dip or entered the market at a lower price. They believe that, despite its day-to-day turbulence, Bitcoin will maintain its zoomed-out growth pattern seen over the last decade. Bitcoin has recently fallen to an 18-month low under $23,000 in a broad cryptocurrency crash, as investors shunned risky assets in the face of a vicious global market sell-off, just 7 months after the virtual currency surged to a record high. Raj Menon of WazirX India discusses the impact of the recent crypto meltdown. Menon revealed startling transaction volume figures. What if Bitcoin falls below 23,000? What will be the impact of the massive crypto meltdown? Now the question remains, should you buy Bitcoin now after such wild market fluctuations? Price swings are to be expected for those who invest in crypto for the long term using a buy and hold strategy. According to Humphrey Yang, the personal finance expert behind Humphrey Talks, big dips are nothing to be concerned about, and he avoids checking his own investments during volatile marketing dips. I've been through the 2017 cycle too, Yang says, referring to the 2017 crypto crash, in which many major cryptocurrencies, including Bitcoin, lost significant value. I know these things are extremely volatile. Some days they can fall as much as 80%. In the end, let us now discuss Bitcoin's future predictions. Bitcoin is without a doubt one of the most popular assets to invest in these days. Because the crypto market has a low barrier to entry, even people who have never traded before can easily become crypto investors. As a result, there are numerous Bitcoin price forecasts available, all aiming to answer one simple question: will it rise again in the future? The majority of experts are bullish on Bitcoin. Some, such as Wallet Investor, believe that the Bitcoin price will reach nearly $150K in the next 5 years. Others, such as Digital Coin Price, have a more reserved outlook. Their BTC price predictions state that the asset will most likely have reached only $100,000 by 2027. That's all for today's video. It should be noted that the video's opinion is not investment advice. It is provided solely for informational purposes. Every investment and every trade involves risk, so you should always conduct research before making a decision. Please leave your thoughts in the comment section if you enjoyed the video. Furthermore, if you are new and have not yet subscribed to the channel, remember to do so and click the bell icon so you don't miss any helpful or informative daily video. Thank you for your time.